Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author on TradingView with over 190k reputation points. In this video, I will be taking a pair, breaking it down from a technical and order flow perspective to try to understand where we have the highest probabilities of the next potential move. And in doing so, I will provide as much free education as possible. So I really suggest that you stick to the video to the end, and I will see you on the charts. In today's video, I want to speak about gold because at the moment we do have quite interesting price action and structure. Starting here on the monthly, in fact, what we can notice is that the market has just tested a very strong level of monthly support and demand. In fact, from here, all this move to the upside was created. Again, here we got a test and rejection to the upside. And at the moment, we can see how we just tested once again this very strong monthly demand and support zone, started already rejecting it to the upside. And what we could expect in general in a situation like this is more potential bullish continuation. However, the problem is that last month the market created this candle here, which is a candle with a very long wick in a red body. Now, usually when you see a candle like this, the next one is actually supposed to at least try to fill in the wick, possibly creating a short-term move to the downside, testing the support that we have at this level before then rejecting higher. So what we can expect is short-term bearish price action and then longer-term bullish price action. Dropping down on the weekly time frame, we can notice how with the last move that the market created, we had this rejection to the upside. Now, I had made a full breakdown of gold when the market was testing this zone, explaining all the reasons for which this move to the upside was pretty much expected. But now that the market has created that move, what we can expect. At this point, we are currently testing previous weekly support turned resistance. And in general, on a retest of previous support and resistance, you at least expect short-term bearish price action. Then, since on the monthly we would like to see a move higher, we could definitely create a double bottom at this zone and print a move higher, but at least the market should try to create this move to the downside. We can also notice how since we have an impulse and correction, if you want to measure the correction after an impulse, you have to take your Fibonacci from the high to the low of the impulse. In that point, we can notice how the market just retraced exactly to the 0.618 golden ratio of the Fibonacci taken on this weekly impulse, which is a very strong resistance zone from which, once again, we could expect a potential drop lower. Now, if we go down on the daily time frame, what we can see now here on the daily, we can see a potential double top being created at this area. And we can also notice how the nearest support would be at this zone. Only if the market will manage to break below this support, at that point, that previous support would be turned resistance here, and what we could expect is a potential retest of this previous support and resistance before then getting a potential move to the downside for the completion of this impulse correction and impulse pattern to the downside. Now, if we go and see what we have when we look at the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check it specifically for gold, what we can see is that with the last report, we went from having 92.6k net positions all the way up to having 124.3k net positions with 31.1k shorts closed with the last report, and not many longs getting added. What this usually indicates is that there is no interest in the short anymore, however, is not ready yet for longs, because otherwise we would see accumulation happening from an institutional perspective, which clearly is not the case that is applying here by looking at this data. So what this usually translates into, if we look at the price action, is a short-term move to the downside before then a longer-term continuation higher. So if we will actually get this break to the downside below the support, and if we will actually then also see the retest of this previous support and resistance at that point, how we could be approaching this potential short-term shorting opportunity all the way back to testing the monthly support and demand that we have identified at the beginning of the video. Now, the way in which we could be approaching this, as usual, is being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best timeframes from a directional perspective. However, when it comes to confirmations and entries, the best timeframes are the intraday timeframes, so 4 hour and lower. Therefore, what we could be doing is monitoring price action from an intraday perspective during this move to the upside, waiting for the market to shift from an intraday bullish market as we would have to an intraday bearish market. And if the market would shift from an intraday bullish to a bearish market and provide to us one of our valid entries, at that point we could be looking for a potential move to the downside for the market to complete this impulse correction and impulse pattern to the downside. Now, if you don't know what I'm speaking about when I say valid entries and this kind of things, that is all part of the mentorship program, which you can find directly at transparentfxtrading.com. What you will see here is that you have the possibility to access my entire course, as well as all the rules of these strategies. You also have the possibility to access one-on-one private mentoring, the big market breakdowns with the Telegram signals, the COT data software, which is the same one that we have just used in this video, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll down past the testimonials, you will see that at the moment I'm running a massive promotion in which you have both a big discount on the upfront cost, but you also have the possibility, if you open an account with the forex broker Blueberry Markets, to get a full refund of the mentorship program price credited directly inside of your trading account, since I have partnered with them. And if you scroll down, you will see that at the bottom you have the possibility to join and gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board. If you enjoyed the video, make sure that you smash that like button and comment below. It really does help with the YouTube algorithm, and I will see you in my next video.